Tom here, Flip Anything USA. So today I've got a special guest. It's Andy Walker from the United Kingdom. He's based in Winchester, and he's a real estate guy. And he's got a popular YouTube channel called Monoperty. It's kind of a mix of monopoly and property. Say hello, Andy. Hi, I'm Tom McKay. I've been investing in real estate, commercial properties, industrial properties, houses, apartments, offices, subdivisions. I also have a mentorship course to help people create their own fortunes the same way. My first class, I had immediate results. Ron made over $200,000 and has purchased 22 properties. Eric has purchased a trailer park and 34 acres of land. Liam has already flipped a few properties and made over $100,000 on his first deal.
Hi, Tom. Thanks so much for having me on. It's a real pleasure.
Andy's actually a polar opposite of me. He's like a perfectionist. His videos are beautiful. When he produces them, they're great. And he does a lot of work. He does a beautiful job. You really do, Andy. You do a beautiful job.
Thanks.
I can't remember who reached out to who. I liked him. I liked what he had to say. It was interesting because he's in the United Kingdom, a little different market than the USA. There's some similarities too. I've got people that buy my book and take my course that are actually in the UK. But I thought it'd be interesting because we can kind of talk about the buying process, if that's okay with you, Andy. And we can just kind of compare things. And they have some. You guys have some strange regulations, I think, too, on renting and stuff, and we'll talk about some of that too. The bottom line, the USA is going to hell in a lot of ways when it comes to this stuff because we have a lot of things. They just keep piling on more bureaucracy, and there's I can't even stand I just pay cash for homes when I buy a home now, and I'm not saying that to brag. I'm saying it because it's almost necessary because it doesn't matter how wealthy you are. If you're going to buy a house, you got to go through all this BS. If there's a loan, there's going to be a home loan. It's just not. It's not hardly worth it. But most people have to go through it. So we'll talk about it. Andy, how does it work here? Like here, typically we go to, buyer and seller make a deal, whether it's direct with each other or with its, through the typical means. We list a property with we'll start with that. Here we list a property with an agent. The agent represents us. They are the seller's broker or seller's agent, and typically we give them 6% to sell our property, and then on that form that we fill out to list the property, in there it'll say the selling agent is giving 3% to the buyer's agent. So if the buyer brings, another agent brings a buyer, they're going to get half that commission or 3%. I do listings at 4.5%, 4.25% sometimes because there's really not much work on the seller side, in my opinion. Some people don't like that and argue with me on that, but that's how I operate. So, but when I do that, I have it's still the same thing. It just says I'm going to pay, say, 4.5%, but it still says 3% goes to the selling side. Goes to the buyer's side, the buyer's agent side, because I want to make sure that the buyer is not dissuaded from representing his buyer who's buying my property, because that's who's really important now, is the buyer, right? And right. So I want to make sure that he gets at least 3%, and so that's what we do here. How about you? How does that work on your end?
Right, so in the UK, it's more simpler than that. Well, I'll say UK. Now, I know there are different laws in Scotland. England and Wales, when you sell a property, you typically pay somewhere between 1% and 2% of the sale price to the agent for selling that property.
And where does the other? Oh, right. Really? And so, what about the other side? Yeah. What about what's going on the buyer's end of that? If there's a buyer's agent, you have an MLS, right?
So, we have the what, sorry?
Okay, an MLS here means multiple listing service. It's kind of a public database of properties that are for sale. That way, right. The agent puts the listing in there, and then the buyers see it, and they go, "Oh, that's in my area," and then they contact you, and then they put it together. So, you don't have a shared database in the UK?
Well, properties are advertised on portals, on websites.
But you don't have...
That's it, really.
You guys don't have... Oh my God, that's crazy.
Yeah,
Yeah,
so
that's crazy to me.
so if I talk through what happens, so if I want to put my house on the market today, I would approach 2 or 3 estate agents, and they would come round and give me a valuation on what my home could be worth, what someone might be willing to pay.
Okay, so that's a property evaluation by the agent.
Property evaluation.
Okay.
And I might get, if I had 3 estate agents come and visit, I might get 3 different valuations.
Right, and that happens same here.
Yeah. So what I would do then is think to myself, which of those 3 is more realistic? Which one do I think is more achievable? And not only that, which estate agent have I warmed to the most? Who do I think can
Who do you
really
believe? Who's the
sell
most
this
competent?
property?
Yeah.
Are they gonna, point out some key features that might not be obvious to someone when they come and view it? Now, when they provide the valuation, they'll also provide their terms of service and their fees for selling this house. So
Are they
if
negotiable?
they do sell it, how much I would pay them.
Is that negotiable?
It is negotiable.
Okay.
And also the time frame could be negotiable, i.e. they could tie me in at 1.5% for 3 months.
So they'd have 3 months to represent you.
To represent me as a sole agent. Now, during those negotiations, I might, for example, say, well, I actually want it listed with 2 agents over a period of 2 months. And they might turn around and say, well, if you go down that road, we will charge 2% if we sell it for you.
Is that because they're both going to share the commission? Is that why?
No, because it will only be the agent that sells it that will get the commission.
The other guy gets nothing then.
The other guy gets nothing.
Okay.
Yeah, so we don't have a buyer and seller agent here.
Okay, so let me stop you there for a second, because now what happens if you're the guy that's looking for a property to buy and you go to an agent and he doesn't have any listings? How's he going to find the property you listed or that somebody else listed?
Well, if I was shopping for a property, I would look at what is available online through these websites. And once I find a property that I'm interested in, I would then contact the estate agent that's advertising that property.
And so you would try to deal direct with the listing broker or the listing agent?
Yeah.
Okay. Is there ever a case where there's 2 different agents? Like, I've got a buyer, you've got something I want, you got a commission, I need a commission?
Only in as much as there might be 2 estate agents that are advertising the property because the seller has agreed and the estate agents have agreed to have more than 1 agent advertise that property.
No, but you're missing my point. This is what happens here. I list a property for sale, and like I say, maybe it goes into I want them to put it on the MLS. I can give them a private listing or a sole listing, kind of how you described it, where they don't have to put it on the MLS. There's no really good reason for me to do that. As a courtesy, I might give them a week to sell it and try to get both sides. That we call it both sides because I know somebody's going to get half the commission here. But I don't know what the incentive. We have buyer's agents, we have seller's agents here too. That's how it works. But what I'm trying to say is, if I have a property for sale and my agent is going to get a 2% commission, I'm in the UK, and now you want to buy it from me, but another agent, a friend of yours says, hey, I found this property, agent. Found this property. This other agent has it listed. How do they share? They must share the commission.
No, there is no share because it's only the selling agent that we don't have buying agents here.
But so an agent can't make money by saying, hey, Andy, I found this property for you. And so-and-so has it listed. Wow. Well, that's interesting.
Yeah, it is. And
it doesn't sound very good. It doesn't sound very good, to be honest.
Yours doesn't sound very good.
Well, no, I'll tell you why. Because if mine goes into a database and it says, hey, everybody, I got this listing. Now everybody has an interest because they're going to go right to my agent and say, I've got a buyer. Listen, I just sold a property a week ago, and I had an open
Mm,
house. We had 40 people go through the property that day, none of which
yeah.
were associated with my agent. Now, the deal is I gave them a 4.5% commission, with 3% going to the buyer's agent. So the 40 people that walk through there, they stand to get 3% if they bring a deal. My agent's only getting 1.5, but all they had to do is put it in the MLS where everybody comes and sees it. Follow me? But
Yeah.
it's like mega advertising. It's mega advertising because it lets everybody know that and here's the other good thing. They start bidding against each other. My property just sold for 50,000 over what I listed it at, which is also by design. I listed it for a price that I expected it to bid higher, but I did that. That's a strategic thing I do. I'll put a property on market a little bit below market so that more people come, because that way somebody will, it's a little bit out of my price range, but let's go look. And then they go, and if they fall in love with it and they get emotional about it, and then they want to buy it, they dig in, they figure out how they can get a little more money. So it attracts more people to get it. Other people that are looking for better than that, you got to be careful too, because I don't want to buy a $500,000 home. I want a $700,000 home. But they still might take a look at it. But the bottom line is they can afford to pay more. So if they do like it, it creates a little competition, and you'll have what happened to me. I get offers for 5,000 over, 10,000 over, 20,000 over, ultimately 50,000 over asking price. But that's how it works there. So that's interesting. So now we know the differences, at least to this point. Now let's talk about when the
So can
deals.
I just give you a scenario of selling a property here?
Oh yeah.
Because I feel like I've got to stand up for the UK
Oh
bit.
yeah. Absolutely.
So, so let's keep the numbers simple. Let's say um, a property is placed on the market for £100,000.
Okay.
So where you live, and I take it the state you live, other states are very similar, are they?
Yes.
Yeah. So if you're paying the buyer's agent 3% and the selling agent 3%, that's a total of 6%.
Well, but I pay 4.5. I pay 1.5 on one side. But yeah, typically that is
Okay.
it. Yes.
So that's a total of £6,000 out of a property worth 100,000.
Yeah. 6%.
So
Yep.
in the UK, I could sell that property and just have one fee of 1.5%. So I'm paying 1,500. Now, because that property is being advertised online, it's still accessible to a huge audience.
Well,
And, we can have open days, um, I wouldn't say it's very common, but estate agents do hold open days to, build up that urgency of selling a home. Maybe we should put this to the audience, ask them to comment below and
yeah.
say, which do you think has the best system?
Sure. Well,
America
here's the
or
deal. I can
UK?
do what you do. I have the option to do what you do. I can give an exclusive listing to my agent,
Right.
and then I'll be just stuck with one agent and his connections and however good his website is. But I tell him, put it in the
Okay.
MLS, give 3% to the other side, because I want everybody to know about it. That's
Right.
why it gets it sold quicker. And, it's like anything else. More people know about it, better chance of it selling for more. But, uh,
Yeah.
but, anyway, it is what it is. It's more about what it is than anything. But I just don't understand. I don't see any incentive for somebody that, like, if I represent somebody that's looking for a house, you don't have that though. You don't have, plain and simple, you don't have anybody that is looking, like an agent that's looking for a property for a buyer.
Not traditionally. I mean, we have people who call themselves sourcers. So,
Okay.
they'll spend their time searching for properties, which they'll then sell for a fee
But they'll get
to people that are
compensated.
looking to buy.
Who would they get compensated by? By the person that's having them search for them, or would they get compensated by the seller, the agent that represents the seller? Do you know?
The person that's searching for them.
Okay, so they would hire somebody to a sourcing agent. Okay,
Yeah.
yeah, I mean that
Yeah.
works too.
But that kind of falls in the more creative way of investing. So it's not the traditional
Hmm.
method,
Okay,
what I would label the traditional method.
Yeah, yeah. No, yeah. Like I said, it's not a competition. I like I say, our system works. Whatever your system works. Okay, so let's talk about at the time that you make a deal. What's the
Mm,
process? We go to a title company or we go to what we call an escrow company. Depends on what state there's, but basically it's the same. If you go to an escrow office, there's still going to be title insurance. If you go to a title office, there's title insurance. They just kind of, it's just really basically different terminology for basically what's done. The same thing is ultimately done. It's transferred. If there's a lender, then that lien holder is recorded of record, and then it shows that there's a lien on that property, within the title, so that the person can't, sell it to somebody else. And it's a way of showing all the encumbrances and
right.
liens.
Okay. So here, the word we use is deed. So we have the deeds of the property, and it's during the conveyancing process um, that those deeds are transferred. And of course, once the finance is in place, whether you're a cash purchaser or whether you've used a mortgage, and exactly the same here. What you were saying before is when you use a mortgage, the process takes so much longer um,
Yeah,
because the lender needs to do their due diligence,
sure.
make sure that they're happy to, secure their cash or their
Yeah,
money
well, we got city
against that
bureaucracy
property.
that comes in now. Like they want to make sure that there's smoke detectors, and they want to make sure that,
Yeah.
it's just another step that really is unnecessary. I'm kind of a,
Mm.
we don't need any help. I don't want any help.
Yeah, no, yeah.
uh,
Just common sense, right?
yeah, yeah, yeah. I mean,
Yeah.
I think people can be responsible enough to buy something as is or whatever, and without all that stuff. But what drives people crazy here is in the loan process is that, like, I own so many properties in so many different entities that a residential lender, they're lost. They don't know what to do. There's 15 tax returns. They're lost. Where if I just had a good job, it's much more straight away. They go, okay, we see your check, we see your overhead, see what your mortgage is or whatever your rent is. You can afford this simple. It's
Yeah.
easy. It's much easier for me just to borrow money against something else I own and buy it. But that's how I do it. But that's not typical. It's typical for investors, I guess. But so my next question, I guess, would be, okay, so you have some of the same process with the due diligence, some of the red tape, we'll call it. Uh,
Mm.
what kind of red tape drives you crazy the most by the lenders, or the lender requirements?
Well, I think, well, first of all, the amount of red tape will depend on the use of that property. Well, especially when it comes to investing. So,
What if it's a
to give you
house
an
or a rental house? Is there a difference if it's their home or if it's a rental home?
yeah, it does make a difference, definitely, because mortgage lenders typically class rental properties as high risk
A little more
to
risk. They charge a little more
residential
interest. Yeah.
properties. Yeah, and you can understand why a lender would want to do
Oh
these
yeah.
checks because I'm
Absolutely.
sure if if someone was to ask you for cash to buy a property, you'd want to make sure that they're buying something
I'd be
you
more
know
inclined to loan
that
it to a
is fit for
homeowner.
purpose.
Yeah, you
Yeah,
think they're going
you
to
know,
take better care of it? Sure.
yeah. So, and of course, depending on the type of rental property it's going to be, will depend on how many checks are done. So, for example, the last property I bought is what's classed as an HMO, a home of multiple occupation, where I have a number of working professionals that rent a room, as opposed to a house where one family would rent that house. Now, there are more checks that the lender will do um, because there are more people living under the same roof.
What if it was
Health
empty?
and
What if
safety.
it was
So,
empty?
oh, they would still want to do the checks because they'd want to make sure that the safety facilities are there. Hardwire fire alarms, for example, emergency lighting, um,
Okay, so probably
before
their
the
main
lender
concern is
release the cash.
they don't want their collateral to burn down,
Yeah, yeah,
uh, because their lien's going to be the lien no matter what. And that's just common
yeah,
sense. That's the same thing we do here. I mean, I mean, maybe not to that degree, but they like to know that it's all, masonry exterior. That's going to get you a better deal on insurance, that sort of thing. What about insurance requirements? Speaking of, how about insurance? You have to buy insurance when you have a lender, especially. When you have a lender, you have to have insurance.
Yeah. So sorry, what's your question about
Like,
insurance?
what is the insurer's requirement when you go insure a rental that you bought or your own home? What's the process for the insurer?
It's quite simple. The insurance company will ask you the construction of the property,
Right.
as you were saying. Is it brick? The type of roof, is it slate? Is it straw?
How old is the roof?
Yeah, how many rooms? How many bathrooms? Those kind of questions, really, and then that will determine.
And they're also concerned whether you live in it or not. Correct?
Yeah.
Okay.
Yeah.
That's the same so far, at least in that respect. Okay. So you got the property. Now that you've got it rented out, any rent controls, any of that kind of weird stuff? Like, there's some cities they have rent control. You can't raise the rent beyond a certain number.
Oh,
New York and Los Angeles have some of this stuff.
How's it working out for? So no, we don't have rent control here.
It's horrible for them.
But I'm interested to know how because people talk about it here.
I remember about 20 years ago or so, maybe 30 years ago, Cyndi Lauper. She's like a, entertainer.
Girls just want to have fun.
Yeah. Because that's what came to my mind too. And she was sitting in a New York rental. I think it was Cyndi Lauper. I may be wrong, but I think it was Cyndi Lauper. And she was living in Manhattan. I think it was Manhattan, in a place for $2,500 a month or $2,000 a month, which was extremely cheap even back then, or maybe it was $1,200 a month. It was just ridiculously cheap for the amount of property that she had, and they couldn't raise her rent. And this is a girl that was a millionaire back then, but she probably got the place before she was so wealthy. But it kills the landlord because you're an investor. You buy a property, and all of a sudden you have rent control. You can't raise your rents, really? I mean, it's your investment. I mean, us landlords and investors, we don't have retirement coming in from a government job or a big corporation, which most people don't from the big corporations now. But our retirement is whatever our investments total at the time that we can't work anymore. And that's what we live on. So I don't like rent control. But we do have that.
Yeah, and I can understand that. I mean, the landlord does risk pricing themselves out of the market if they increase the rent too far.
Yeah, but that's the free market. It's supposed to be.
Yeah,
that's supposed to be the free market. You don't have to live there. If you don't like the rent, you don't have to live there. But they got it made. They got rent control. Stay there, like them or not, unless you have a really good reason to get rid of them. So anyhow, it's, again, this is the bureaucracy that I talked about that's kind of hurting the country. But that's just one thing. But overall, not so bad. We buy stuff. If we can buy it under market, we sell it for more. Of course, we pay taxes on everything that we, sell and make a profit on. So the government, gets money from us as investors no matter what. And you think it doesn't seem appreciated like it ought to be, but, but again, the problem with buying a rent control property is you don't want to buy it because the numbers dictate the cap rate of how much, and so let's talk about cap rate. What is the cap rate, meaning the total, like if you paid cash for a property and after removing all the bills and taxes and et cetera, what would be what would you expect to make? What interest would you expect to make on the total value of the property? Like here, generally, 7.25% is probably the average investor's, minimum cap rate. A lot of times they'll advertise stuff at a 6 cap, and like sometimes if you've got a really awesome tenant with a long-term lease that they pay for everything, including fixing the roof if it needs it, or AC and every problem on it. And we have leases like that we can write. We have triple net leases where they pay the taxes. If the taxes go up, they're responsible for the tax bill. And you can make it everything. Like you're responsible for everything on this property. Everything, anything it needs, you can do that if they sign it, if they'll go for it. But everything's negotiable in that respect. So in that respect, we have a really good system. We have we have a nice setup. I mean, I just resent any the bureaucracy. I just can't stand it. Some of the stuff that comes along. But
Yeah.
But how about on your end? Similarly,
So I'd say 6%. Now, sometimes that 6% can be hard to achieve, especially if you're first starting out, and unless you go for something like an HMO, that's a bit easier to increase that.
what's an HMO?
House of multiple occupation, where you have a number of people renting individual rooms.
House or motel? What'd you say?
A house.
House.
Yeah.
What's the M stand for?
I think it's similar. You guys have what's the word?
Well,
not triplets.
Triplex, duplex. Is that what you're talking about?
Triplex,
multifamily.
duplex,
We just say multifamily. I mean, we say duplex, triplex, and beyond that, we just call it multifamily in general.
And from what I understand, that's 3 or 4, like 2 flats or 4 flats, isn't it? In one building.
You know what? I can
or
only
apartments.
Myself, I might call it duplex, but if it's more than one family, it's a multifamily. We just call it multifamily. You see,
and each duplex has its own bathroom, does it?
Oh yeah, there's no. I mean,
and kitchen.
Yeah, no. I mean, there's hotels that are like hostels where they have a hallway that goes down to a common bathroom, but that's not very common. I know where there's some of that stuff, but that's like a hostel, what we call a hostel here. But no, everybody's got their own bathroom, and a studio. They call a studio apartment. That's where you walk in and you're looking at the bed. The bed's in the living room, and then there's a little kitchenette, which is a little kitchen, and there's a shower and a bath or something. But but yeah, so it's hard to get 6% here on homes. Homes is tougher. I mean, if you buy stuff under $200,000, $300,000, I got one that's actually penciling 6% right now. That's $300,000, but it's worth $400,000. I bought it under market, so really, but I'm waiting to sell it for a year because the capital gains go down. The taxes that I pay are less a year later, which that's something else we can talk about is the tax on profits. Here, what we have a thing called capital gains, and you're going to pay 15% capital gains. We have a thing we call the Obama tax, which is 4%. We get hit for now for health care or whatever, some program. But it used to be 15%. Now I think it's 19%. And then after, but if you hold, that's if you hold the property a year. If you sell it before a year's up, then it's going to be 30% plus that 4%. So then it's 34%. Now, and then you factor in, if you're a high earning person, it may be a little higher than that. They other things that'll make it a little bit more or less. But if you're an average guy, average worker, average, say average income, that's what you're going to pay. 34% short term and 19% long term, meaning after a year. How about you?
So taxes in the UK are far worse than America. Now, I know each state has their own tax laws, don't they?
Yeah. Hold on before you say that. We'll talk about that some more.
We could do a whole video on tax. Yeah. And to be honest, I don't know that much about tax.
Yeah.
But what I do know is that, we too have capital gains tax. So you pay tax on any profit that you make when you sell.
Does it reduce if you hold it over a set amount of time?
No.
So there's no such thing as long-term, short-term. It's tax.
The longer you hold it, the more uncertainty there is because the government keeps increasing and decreasing.
Yeah. Well, we have
the
that
rate
too.
of capital gains tax. So I think at the moment it's 19%. I could be wrong. Don't take my word for it. And I understand it was dropping to 18%. Maybe that's April this year. But I think I may have heard that it is increasing. So
that would probably be the right rumor.
But it also depends on what other income you have. So if you're in a high tax bracket, I believe it's up to 28%. Um, I'm not the right person to ask.
Yeah.
I mean,
Well, I know
I
you're
don't
more of a buy and
plan on
hold guy.
selling.
You're more of a buy and hold, right? So you're not
I'm more of
actively
buy and
selling.
hold. Yeah,
Yeah, where I'm an
yeah.
active seller and buyer.
I'm in the mindset now of not wanting to sell.
Right.
You know, I just want to build a portfolio and leave it for my children, and leave a bit of a legacy.
Mm.
Yeah, I've sold properties in the past and then regretted it. And
Yeah.
and I
Well,
like to be a forward thinker. I don't like to dwell on the past too much. But one thing I've learned is um, I would rather keep. If I can buy, hold, that's what I'll do.
you know what? I mean, I can look back at properties I've owned that are worth more, but of course they're worth more. They're in the past. You know what I mean? But the
Hmm.
problem is it's hard to buy another property unless you sell a property. Now,
Yeah,
if you're, if you're a YouTuber like Meet Kevin or Graham Stephan, they're making $1 million a month. They can buy something new
hmm.
every month and not worry about it. They pay cash for it. You know what I mean?
Yeah,
So they don't have that dilemma of making 100 grand a year or 50,000 or 20,000 a year, depending on the parts of my life.
hmm.
Uh, so I needed to sell one to get the cash so I could go buy two more, or I could buy another
Yeah,
one bigger. You know,
yeah. And don't get me wrong. I'd never say never. If an opportunity came across my lap that would allow me to buy up, and increase my portfolio and increase the income, then of course I would consider it.
right?
I'd consider selling one to fund that. Um,
Okay,
yeah, but
so
I would also look at other ways. So that would be my last resort.
which
If
would
I could
be, yep.
refinance
Let's talk
and
about
release
that.
some equity, I would rather take that approach if it was doable.
Okay, so what do you know about pulling money out of a property to refi? Like I pull lines of credit off for properties that I have. Typically, when you pull a line of credit, you either have to owe nothing on the property or whatever you do owe, they're going to, in other words, if I want to borrow $1 million against property I have that's worth, say, $2 million, and I owe $300,000, well, they'll give me a $1 million line of credit, no problem, even more. But they're going to want to pay off that first trust deed, that 300 that's held by another bank. So they would come
Yeah,
in, say, okay, here's your line of credit. We're paying off that 300 that you owe to somebody else, and now you've got a line of credit for 700. Uh, that's over and above the first that we now hold. So, as long as you got a good credit, the banks are pretty cool for loaning money.
yeah, yeah. Same here. So um, we work on loan to values. That's a term you use, I think, isn't it?
Sure.
Loan to
Yeah,
values.
yeah. Like
Um,
they'll loan you, like right now that they'll go 65% loan to value. So you got
oh,
something
right,
worth 3 million, they'll give you 19.5, 1,950,000.
yeah. Oh, right. Well, here they go a lot lower than that. So currently, as we're recording this
Mm-hmm.
in February 2021, you can get a loan to value of 80%.
Oh, okay.
Yeah,
Well, so you can borrow 80% against your home.
yeah.
Okay.
In other times, um, I've been able to get a loan to value of 90% on a rental
On a
property.
rental. Wow, that's risky for a
Yeah,
bank. I wouldn't do that.
and 85.
Yeah.
Um, yeah, 90's been the lowest. Um, 85, 80. Typically, the best I like to stick to is 75.
Hmm.
Um, because I've heard 75% during any recession periods in the last 50 years, that property values haven't dropped more than 25% on average.
Hmm.
So that's why I've kind of considered a 75% loan to value safe, because there's
Right.
less risk of that property falling below that mark.
Right. And what's interesting now is because the interest rates are so low
Mm,
that people can actually buy a property and accept a lesser cap rate because the spread is bigger between what you're
yeah,
borrowing and the cap rate. So I think we're going to see cap rates drop from 7 to 5 or 6, which means I can ramp the property values up a little bit on the stuff that I sell.
yeah.
and then I can get taxed more too. But but yeah, so yeah, that's interesting. And you know what? And I'll go ahead and plug my book. So I have a book, Wake Up and Smell the Real Estate. It's a bestseller on Amazon and Kindle. You can get it in paperback. You can also get it in Audible. Wake Up and Smell the Real Estate for those of you just coming in. I also have a mentorship, Flip Anything USA. Go to FlipAnythingUSA.com, and you can learn to invest like me. I bought hundreds of property, made tens of millions of dollars over my lifetime. Bought my first property when I was 19 years old. In fact, this one behind me, I actually built that about 22 years ago. That's 16,000 square foot office. Makes a lot of money too. But anyways, back to the show. Who is like somebody that you like, an investor that you respect, and that that you really took an interest in the UK? I know, and you've interviewed a few.
Yeah, I have. There's a guy called John Howard who's been on my channel a couple of times.
John Howard?
Yeah, who's, I'd consider him to be in the same league as yourself.
Oh.
He's been in property for decades and has done developments and all sorts.
What does he concentrate on? I mean, multifamily, or what kind of properties?
All sorts. I mean, one project I went to visit was a block of flats that he built in Ipswich, which is on the east coast of the UK. I thought that was impressive. It came with quite a bit of risk because the development had been started 10 years prior, but then stopped in the 2008 financial
the bank crisis, sure.
So he took that project on after it had been started and been sat.
But he was able to hang on to it. Or maybe the banks just said, what are we going to do? We'll ride it out with you.
So he basically bought it from the banks, as far as I understand it.
Oh, but he was the originator that started it too?
No, he wasn't. No, somebody else started it.
Nice.
So, yeah, he basically purchased a job that had already started.
Yep.
But
and that's kind of what us investors do. We kind of pick through the bones and rubble of people that have crashed.
It's not something I would like to have taken on, but
yeah.
He did it and he pulled it off, and he has a number of projects on the go at once. But I mean, when I started, because I fell into this as an accidental landlord, so I didn't really, look up to anyone when I started this.
How'd you fall into it? What's the short story on that?
So when I was in the army, my wife and I had our own home, and we both used to, well, no, that's wrong. So we had our own home. It was commuting distance for her daily, but I used to only commute at weekends. So I'd live in barracks Monday to Friday, go home at the weekends, which was fine. But then when she fell pregnant, we decided we didn't want to continue living like that. And so we moved into army family accommodation, and we sold that house. But we wanted to stay on the property ladder. So we started looking for a property that we could just rent out, because we knew we'd find it difficult if we wanted to buy a house 10 years in the future, because I would have just spent that money on fast cars and holidays. It would have been gone. Mm-hmm. So we wanted to secure it back into bricks and mortar. And that's basically how we got started. And, we bought property and rented it out. And
so that was just since we're on the topic of buying property stuff as well, I just want to interject this real quick. When you bought your home, were you able to defer the taxes? Do you have any of that stuff? In other words, when you sell your home here in the USA, if it's your home, your homestead, you can sell it, and you don't have to pay tax on the margin that you made, as long as you reinvest it within 2 years into another home for yourself.
Yeah, well,
do you have that option?
Yeah, you don't have to pay tax
on your home.
You could have your own home, sell it, and not buy another home, and you wouldn't have to pay tax.
Okay.
It's only on second homes that you would pay tax when you sell.
It's pretty much the same here. Yep.
Yeah.
I didn't mean to interrupt. So
yeah,
I just want to get.
And so the only other thing I'd say is, fast forward 10 years, and I look back on what the rental property had achieved, and I thought, wow, I haven't spent any time on it because I hired a letting agent, a property managing agent, to look after the tenants and to market it. And I just thought, wow, if I've achieved that with pretty much giving no time to it, what could I achieve if I threw myself at it? So when I left the army, that's what I decided to do.
So did you buy a home for a homestead first for you and the family, and then bought a rental second? Is that how you did it?
So I actually missed the point. So when we sold our home, we took that cash to buy a rental property. As we were shopping for a rental property, we spoke to a mortgage broker, and he asked us if we'd considered buying two rental properties because the amount of cash we had could be split into two. And we had no idea we could do that. But we liked the idea, so that's what we decided to do. We took his advice. So we ended up buying two rentals. Fast forward 10 years, I could see how well they'd performed and thought, wow, this is good. They'd both achieved some good capital growth. Now, the plan was for us to move into one of those properties when the time was right. And when that time came, what we actually ended up doing was selling one of those properties and buying our home that we're in now. But it's, similar result.
So you moved into one of those two properties.
So we moved into one, yeah.
Gotcha. Okay. And you've enjoyed the landlord process, like you say, it's been pretty painless for you so far?
Yeah, it has. It has its ups and downs like any business, but yeah, it's well worth it.
Great. Well, this has been really informative, Andy. Hey, so let's talk about some of the videos you've made. What's a couple of your favorites right off the top? Your most popular ones. Let's just start with that. John Howard.
I think. Yeah. So I always prefer making videos with other people because, for one, I learn what they have to say, and it also helps other people watching. I mean, I know a bit about property investing, but I by no means know everything. So I like to share what I know and try and put that across as succinctly as possible.
Yeah.
But I also like and prefer interviewing others that have got more experience, that have got more knowledge to share. I think my most popular video was about a renovation project which I did. And I think my second popular video is about using equity in your home to buy your first investment property. Because, my videos are all geared towards beginners, people that haven't started. I just want to try and give them the confidence to start. If someone is thinking about it but has doubts.
You're just sharing your journey.
I'm basically, that's how I see myself, is I just want to help those people gain that confidence just to take that first step and buy their first investment, to help themselves and their families in the future. Yeah.
Right. Which I'm on a similar mission. Of course, I'm looking back over a longer history. I'm older than you, but I really wrote my book and stuff. All that originally was kind of for my kids. Or I write it to a best friend. I have 4 kids, and of course they're not interested in real estate. I got 2 graduated. My boys are into the stock market.
Not so much now, but they might be in the future.
Oh, they will be. They believe me. They can see. They know how much I believe in. And then, I mean, look, they've got so much of it just by osmosis. I mean, they've been side by side with me, all the kids, at one time or another. I used to have a routine. I'd swing my daughter around. I'd have to swing her around in every room of every property that I buy. And then, of course, I think I had to be too many rooms, and she's getting heavy. So, not heavy. I just getting old. Couldn't do it anymore. But yeah, it's been a lot of fun, and I love real estate. And I'll tell you, anybody watching, listen, don't think for a second that you can't do it. I started 19 years old. Andy started young. Anybody can buy property. Don't be intimidated by the process. It's just like buying a car, except it's a much better decision, purchase, because think about, there's nothing that a bank will loan you money on, or you can't borrow money on anything for the long term like you can with real estate, and with so little down. Only real estate, and that's because real estate values go up. They go up, and you think about it, when you can buy something with only 10% down, you get the benefit of all the appreciation of that other 90% of that borrowed money. You're getting the appreciation on that whole property. So you got to borrow money, and you got to make money on borrowed money. So there's not a better way to make a living. There's not a better way, but get started as soon as you wake up to it. My book's called Wake Up and Smell the Real Estate, by the way, because people don't wake up to it, but it's a shame because, time goes by quick. And I was just lucky. I was lucky that I learned my lesson at 19, and Andy learned his lesson. He bought 2 properties. The guy said, "Hey, you can buy 2." And he's like, "What? We can, right?"
Yep, that was it.
Yeah, and now he's hooked.
Yeah,
he's hooked. And I urge you to watch his videos. Andy's content is really great. He does a super good job, much better than I've ever done on anything. Mine is very rough and raw. It's an iPhone and a selfie stick, and once in a while in the studio it's a little better. But I don't have his talents on that. But he does a great job. Urge you to watch it, and that's why don't you go ahead and plug your channel, Monoperty.
Yeah, Monoperty. Can I just say, Tom, that
Yeah.
I would say that maybe I should get away from that and create more content, because having the the rough real-time video, people want the content of the knowledge of what you got to share. They don't necessarily want it polished. So it is something I'm trying to move away.
I don't know. Yours looks pretty good,
or have a good mixture. I know,
Yeah.
but there's people. I have to think to myself, what is it I'm trying to achieve here? And what I'm trying to achieve is sharing the knowledge, and really I should be doing it more quickly. So
no, I agree.
I appreciate the compliment, Tom.
Yeah.
But I wouldn't put yourself down, because you are pumping out that knowledge.
Yeah, no, I'm not really. I don't mean to even put it down. Listen, my stuff is raw, but it's real. Okay, it's real, and that's why my stuff is. I can't stage buying a house. There's no money in it for me. What I do is I turn on my camera and I say, "Look what I just bought." Chick, I'm excited about this. I'm excited about this, and this is why it's worth more. And then I show you the video after I buy the property. I don't usually show it to you before, because I don't want to blow the deal, because that's reality. That's how it really, really works. And a lot of people appreciate the raw stuff, but again, I appreciate the polished stuff too. It looks good. It looks great. And that's the problem in my deal, is I have a lot of slick gurus that really do a super polished job, but they don't know crap about real estate.
Yeah.
But people buy it. They get distracted. They think, "Oh, wow, I want to have a nice car like that," and I'll buy the book, or I'll buy the $5,000 course or whatever. So there's a lot of snake oil out there. You really got to do your due diligence out there. Don't last thing you want to get robbed of is your seed capital. There's nothing worse. And that's why I get frustrated, because I think people write me and say, "Man, I paid $997 of a $5,000 course, and I've already learned more in your book for $10." And and I got a lot of testimonials and people that have made money, and the guys that are out there, the snake oil guys, they claim to have had thousands of deals and helped thousands of people, but they have like 0 testimonials. So just if you're a numbers guy, even if you're not a numbers person, it's not hard to figure out that something's wrong. So, but
one thing for people that are looking to buy their first investment property, I've got a property viewing checklist, which is, just helps people to remember to look for certain things when they're looking at a rental property. And they can download that for free, no opt-in, no email address required. And that's at monoperty.com/checklist.
Hey, Andy, thanks a lot. Really appreciate it. And
thanks for having me on.